Today's Sunday, June 28th, and let's get started with our market awareness and market week video. It was a very interesting week this week, and it's gonna be a week where we probably gonna look back and think things have changed a little bit. Look at what happened this week. The Nasdaq had a negative week, which is almost unheard of, down 1.5%. The S&Ps was almost down 3%. The Russell was down 3%, and the Dow was down a little bit more than 3%. If we look what has happened in the last 3 months, we can see the huge rally we've had since the end of March and April. The Nasdaq is still up 31% since that low. The Russell 24%. The S&P up 21%, and the Dow is up 18%. But we have been up as much as 40%, and we have lost a little bit of the power of the market in the last, I would say, 2 weeks. June 8th, we saw a peak in the markets that hasn't been able to get back to that level yet. And we're gonna see what's going on inside the market to see what is the market telling us right now. As you can see, we're still the strongest sector still is the technology sector, led by the FANGs: Facebook, Amazon, Google, Netflix, Microsoft, etc. And actually, right now, it's the only sector that's still in the green for 2020. We can see energy has been the weakest sector, followed by financials. If we look at the financials, this week we had some interesting news. There was a stress test done by the Fed to see the banks, how healthy they were, and I guess the market didn't like what it saw, because the XLF has retraced from a high of $27 down to $22.50, and normally financials are telling us that the V-shaped recovery that everybody's thinking could possibly not come to fruition. And also we know that there's always a bull market somewhere. We can see gold is breaking out very strongly, and personally I think we could see gold 2,000 and 3,000 in the next few years, because the central banks of worldwide have printed so much money that gold is going to be a store of value in the future. Here we can see that bonds had on June 8th had their low also, and since then bonds have gone up significantly, giving us another clue that that V-shaped recovery may not come through fruition. It's also very important to keep in mind that, of course, the stock market is not the economy, and the stock market is a forward-looking indicator. But we're seeing some things that are worrisome: gold up, bonds up, financials down, and especially the sectors. The sectors here are very worrisome, that only technology has been able to be up. And the last week we also had some troubling news from Facebook, where Facebook is losing a lot of its advertisers. And look at this huge red candle could be an omen if some advertisers start pulling out of the stock. Of course, Facebook still has some of the most popular apps on the web. It has Instagram, it has WhatsApp, it has Messenger. Although a lot of people don't use Facebook anymore, they still use those services tremendously. But this is like a canary in the coal mine. It's signaling that something may be shifting, and this could affect the other FANG stocks as well. Now let's take a look at the broader market and try to see if we can predict where we're gonna go next week. As you know, these are my momentum indicators. The green line is the 5 day, and the red line is the 10-day exponential moving average. And we see something changing. We see this island here that has been left by itself, and also the market has been down below the indicator for 3 straight days. We haven't seen, if we go back, we haven't seen the market being below the indicators for 3 days in at least 8 weeks. Now, I'm not still worried about the market right now. There are some definitely areas of support that will help the market withstand the down move in the future. Here we have the 150-day at 98.78, which is a key place that the market should bounce, as it did here back in June 15. And then if we can't hold this level, I'm looking at two more levels, 29.34, and finally a level that would really scare the bulls, which is the 50% retracement number from the up move, which is 27.93, which I think we're ultimately heading there in the next month or month and a half, because unfortunately this V-shaped recovery has not materialized in the real world, and earnings season is starting early in July. And definitely when earnings hit and companies show their real sales power and earnings power, the market's going to realize it got a little ahead of itself, and we could probably retest these two levels. I will probably going to be aggressively buying the market if we hit the 27.93 area, because I'm sure the Fed will definitely come in with more stimulus, more ETF corporate buying, more corporate bond buying, more printing of money to prop up asset prices. Now, as you know, we're coming into the summer months. Normally, summer months are very low in volume, and the moves get to be exacerbated. And remember that we have come up a lot since the March 23rd lows, and maybe a small pullback or a retracement of that huge move is in the cards. Be careful out there. It's going to be really interesting and really crazy this week, especially with a holiday week coming up, and we could see some more weakness in the market, because this is a warning sign. It's not still a red flag, but it's a yellow flag to telling us to be worrisome, and maybe pull in your stops and maybe hedge your portfolio a little bit more to the downside. So I wish you all happy trading next week. Stay safe out there, and remember, you gotta risk it to get the biscuit. Good luck trading, guys.